Well, for more on this, I'm joined by Alistair Heath, who's Deputy Editor of The Daily Telegraph. Welcome to you. And let's start, shall we, by looking at the state of the bank's finances, because, in short, it's been quite a tough time for HSBC. In February, it posted a 17% slump in profits, down to £12.1 billion. That's thanks in large part to a payment of regulatory fines. So, Alistair, a fall of 17%. But £12 billion sounds like quite a lot, so what kind of a state is the bank in?
It sounds like quite a lot of money, but in fact, because it's such a large bank, it's really not enough money to satisfy shareholders, and they're really demanding cost cuts and more profits, and they need it really because they're not making a good enough return on their investment at the moment.
And we talked about fines, didn't we? So let's take a look at that, because since 2011 the bank's been hit by £7.3 billion worth of fines and charges as well from regulators around the world. And Alistair, remind us what those fines were for.
Yes, I mean, these have been massive fines, and there have been many different kinds of fines. There's been there's PPI mis-selling in the UK, for example. That's been a big contributor to these fines. There was a massive scandal involving the bank's Mexican arm about money laundering. That division wasn't strict enough when it came to controlling where money came from. And you've had a more recent scandal in Switzerland involving behaviour a few years ago about whether customers pay their taxes or not.
So lots of fines there, but also we've got the banking levy as well, haven't we? Because this has cost HSBC £729 million last year, and that was on top of new industry rules on ring-fencing retail banks from the more risky investment bank divisions. And all of those steps, Alistair, were in the aftermath of the financial crisis, weren't they? Designed to protect customers and also to penalise the bank as well.
Well, there are two different kinds of rules here. The first was the banking levy, which is basically a tax on banks that are based in the UK. And of course, HSBC is furious about this because they were never bailed out. So yes, they were fined for various things, but they were never bailed out. They were not like Lehman Brothers at all. They were a very secure bank in the run-up to the crisis, yet they're still being hammered more than anybody else, really, by this tax because they're such a large global bank, but based in London. And of course, you've also had the ring-fencing situation. Now, that's different. That's part of an attempt at making banks safer, but it's a controversial attempt because there's more than one way to make banks safer. And the UK has decided to tick every box here, and that is costing UK banks a lot of money and pushing up things, for example, like mortgage costs and so on.
Let's take a look at the contribution that the bank makes to the economy, because while many may not sympathise with the bankers, they would argue that their contribution to the economy is essential for the country's prosperity. In 2014, financial and insurance services contributed around £127 billion to the UK economy. As you can see there, it's 8% of the UK's GDP. On top of that, the sector employs over 1 million people, a contribution to jobs of around 3.4%. So it sounds like an awful lot. So what would the consequences be then of HSBC moving its headquarters abroad as far as money to the Treasury is concerned?
I mean, there's no doubt whatsoever that financial services in general and banking in particular are very, very important to the UK. They're really important to our economy and also to the city and to London. And they create not only these, this GDP you've talked about, but also lots and lots of tax revenues, huge amounts of money for the Chancellor. So it's really dangerous for the UK if large banks start to move out of this country. Now, in terms of jobs, you wouldn't see that big a difference because HSBC can relocate to Hong Kong, for example, by merely moving 500 people or 1,000 people out of the UK. That's not where the big job cuts are going to come from. The jobs cuts are coming from the fact they're going to close a lot of branches, that they're automating procedures, and they're just really having to hunt for cost reductions. But it would be a really big negative signal for the UK were HSBC to leave.
OK, but also the bank, let's take a look, it's paid a fair amount in tax as well, hasn't it? Though, as some would argue, not enough. 67 billion pounds rather in taxes, and that came in corporation tax, income tax, national insurance, as well as the banking levy. And that's over 1/10 of total UK government tax receipts, and the banking sector alone contributed £21 billion. So there's a sense that while the banking levy raises money for the Treasury, there was also this question of fairness, the sense that the taxpayer should be paid back after the bailout. But HSBC would argue we didn't ask for a bailout.
For a start, HSBC wasn't bailed out, so they're being hit by this tax. But the problem is not really that. The problem is whether you think this huge tax burden facing banks is fair or not fair. if banks start to leave the UK, they're going to start paying less tax because there's going to be less taxable activity here, there's going to be fewer jobs here, and the headquarters won't be here anymore, so they won't pay as much or any of this banking levy anymore. So that's really the question. The question is no longer one really of choice. It's not so much a political choice, but of political reality. Will banks start to leave the UK? Will HSBC leave the UK? Will other banks like Standard Chartered leave the UK? And that would damage our tax revenues and our tax base. So that's why it's so important for the government to look at this really, really closely.
Okay.